So AI safety memes said this morning. AI just memorizes and regurgitates. Okay, buddy, then explain to me how it can predict the literal future better than humans. This was a retweet of a post by Dan Hendricks, who was retweeting a post by Prophet Arena that I guess I'm kind of retweeting with this YouTube video. But wait, this gets good. This is important. It's not just retweets all the way down, I promise you. Dan Hendricks, he's the Center for AI Safety Director, XAI and Scale AI Advisor, PhD in AI. So Dan Hendricks, he's one of the AI safety people, right? So he's the managing director for Center for AI Safety. They were the main sort of group behind humanity's last exam. I believe he played a big role in the push for California legislation when they were trying to enact that legislation surrounding AI, which was eventually voted down. But he's saying that there's a new benchmark that shows that AIs out of the box can perform similarly to or better than prediction markets at forecasting the future world events. And he's talking about the Prophet Arena benchmark / leaderboard. So Prophet Arena, as far as I can tell, has nothing to do with the sort of AI safety community. It's a separate standalone thing. It's a live benchmark for predictive intelligence. And as you know, recently I've been covering a few different types of AI benchmarks because the old ones are either kind of useless or they're kind of easy to game. They don't really necessarily show kind of what we're looking for. They don't really showcase AI's abilities. You know, an AI getting a score on a multiple choice question or just answering questions correctly. Is that a true sign of intelligence, or is it just kind of drawing upon its training data to answer the questions? A few new benchmarks that have been coming out are phenomenal. They're very interesting in that they truly showcase what these models are capable of. And maybe calling them benchmarks might not be the best word for it. So for example, AI Village, I think is incredible. I don't know if I would call it a benchmark, but it's very important. It does showcase how fast these AI abilities are growing. The whole Claude plays Pokemon and Gemini plays Pokemon and now GPT-5 plays Pokemon, I think also is a good benchmark, although there's problems there because it really depends on the scaffolding that the humans build around these models to get them to interact with, Pokemon. But those are very interesting benchmarks that kind of showcase the growth of the abilities of these large language models. None of them are perfect, but it's interesting to see kind of explosion of creativity in how we approach measuring intelligence, machine intelligence. So how well can AI predict the future? By the way, notice GPT-5 and O3 are models number 1 and 2. We'll get back to that in just a second. Now, as most of you, I'm sure, know, being able to sort of know what's going to happen in the future allows you to invest in stocks and various other things very, very effectively. In fact, there's this kind of infamous Nancy Pelosi tracker. So Nancy Pelosi is a legislator here in the United States, and she has an incredible investing record. It's almost as if she knows what's going to happen in the future. That's kind of a joke. She does because she kind of knows what bills are on the floor, what laws are going to pass. And allegedly, I have to say allegedly, please don't sue me, I guess she invests based on her knowledge of future events. If you're wondering if this is illegal, yes. If you're wondering why it's legal, no one knows. By the way, this isn't like a political thing. She is as good or bad as everybody else in politics. Take that however you want. This is just meant to show you that advanced knowledge of events, being able to correctly predict certain events, is a superpower that, in this case, for example, allowed her to outperform nearly every hedge fund. So very smart people trading money, following the news, right? They get beaten, they get cooked by somebody that's able to predict certain things better. So as you can see here, her returns are north of 100% versus for the same time period, the S&P 500, kind of like the big index that covers most of the big companies that you can invest in. It's sitting at 18%. So she's absolutely crushing it. And by the way, this is not, and again, not left versus right, because neither one of the sides seems that they're trying to outlaw this kind of trading. We also have things like poly markets that allows you to bet on various outcomes around the world, whether that's, various global conflicts, election results, Fed decisions, Super Bowl results, even how the Bitcoin price will perform, Elon Musk number of tweets, etc. And you can make money if you guess correctly. And that brings us back to Profit Arena. So I hope I kind of made it clear that this isn't like oh, cool, it can like predict certain things. This is huge. And unfortunately, a lot of our capital markets are built in one way or another kind of on top of this. So kind of a big deal. Again, if something can have superhuman ability to predict, it's kind of a big deal. It might break a lot of things that we're used to. So, for example, here we have the various model predictions for certain events. How many countries will create crypto reserves? Again, this is Profit Arena. This is the benchmark that we're talking about. As you can see here, Quen and GPT-5 and Grok and Gemini all sort of predict with probabilities what are the chances of this thing happening, right? Hurricane Wendy category, Cincinnati Pro Football, exact wins, various political nominees, who will perform at the MTV Video Music Award. Looks like DeepSeek is just convinced it's going to be Miley Cyrus. It's so certain of it, which is strange. Okay, awesome. And as you can see here, that's the date that sort of prediction closes. So I'm going to have to switch out of dark mode to show you these results, but these are the Profit Arena leaderboard. So who is the best predictor? So they're using the Breer score. The Breer score measures the statistical accuracy of a probabilistic prediction by computing the mean squared difference between the prediction and empirical outcome distribution. So importantly, this isn't just like, did it get it wrong or right? So they give a probability of something happening, and that's how that score is measured. So that's the Breer score, but there's also going to be a more dollar-based, ROI-based, return-based score later. So just hang on for 1 second, because I think that's probably even more interesting to look at. But so as you can see here, GPT-5 and O3 are very accurate. They are places number 1 and 2. Place number 3 is Gemini 2.5 Pro, and followed by GPT 4.1. Basically, the green ones are the OpenAI models. So as you can see here, they're all doing very, very well. Gemini 2.5 Pro is in 3rd place, just slightly behind the first 2 OpenAI models. That's the best Gemini sort of Google DeepMind model. So the other ones are lower, but that sort of makes sense. In fact, I don't see any of the other ones, but those are like or actually they have the Gemini 2.5 Flash. So that's Gemini 2.5 Flash. But again, I mean, really, we're looking at Gemini 2.5 Pro. I am not seeing any of the Anthropic models on here, but notice Grok 3 Mini and Grok 4, very high. It has a very respectable showing, right? So at 80.81 and 80.26. Interestingly, the Chinese models, while a little bit lower, like the open source Chinese models, they're like a little bit lower. But notice Kimi K2, DeepSeek Chat V3, Quen 3, they're all sort of right after, Gemini, Grok, and the best OpenAI models. Surprisingly, DeepSeek R1 does very poorly compared to everybody else, but it's interesting to see the open source models doing so well. And here is sort of like the average return expected. So it measures the decision value of a probabilistic prediction by simulating the expected profit of an optimal betting strategy based on the prediction, right? So if you were out there in the real world using these large language models to inform your decisions and betting on the markets according to the predictions of these AI models, this would be your expected average return. You're also able to set the risk aversion level. So by the way, there's tons of documentation here about how they measure these things. So for the average return, so they're pretending or just using $1 as a bet for each one and seeing kind of like what the ROI would be, but they do explain the math and all the theories behind it, in great detail. So unfortunately, this, like the math and intersection with like predictions and markets, stuff like that, it's a little bit out of my wheelhouse. If you know anyone that can explain this very well for people of any background, I'd be kind of curious to understand a little bit more. But if my understanding is correct, in a nutshell, so first of all, you're betting $1 on each event, right? And they're using something called Kalshi. So here's Kalshi. So it's another kind of market platform where you can bet, similar to Polymarket. And there's tons of bets, some political, some, for example, will any Mr. Beast video get more than a certain amount of views? So movies, predictions for movies, Time Person of the Year for 2025. And will Cardi B have a #1 album this year? What do you think? What would your guess be? Do you know who that person is? Whatever. My knowledge of Cardi B comes from when Pliny the Elder used to jailbreak the voice models. One of his favorite go-to ways to demonstrate that he was able to jailbreak it would be for those models to sing some of the more notorious Cardi B songs. You might recall a video where I tried to play one of those things and I had to bleep out like 95% of it. So there's that. But notice $17,000, almost $18,000 being bet on whether or not she has a #1 album. New Jersey governor, $731, right? So Democratic nominee, $15 million. So coming back, how Profit Arena ranks how well these models do. So they use Kalshi. They're assuming you're betting just $1 on each event. So for this Cardi B thing, you can bet 46 cents if you think yes, or bet 61 cents if you think no. So 46 and 61 is how that distribution sort of functions. So if the market thinks there's a low chance, you can bet a little bit to win a lot, or vice versa. But here they're assuming a $1 bet. And those are sort of the implied probabilities. And they're using an all or nothing contract, so $1, which pays $1 if the outcome occurs and 0 otherwise. So I'm sure I did a horrible job of explaining that and completely fumbled everything up. But the point here is that if the models are able to predict certain events better than humans, that creates this sort of arbitrage opportunity where if you're using these models to predict outcomes, then you're able to earn money from these markets until the markets catch up, and then everybody is using the models to make their predictions, and then it's just AI models all battling each other out to see who can make the better predictions. So it seems like there might be millions or billions of dollars made by people that are able to put this into practice, after which kind of the whole opportunity to make money playing these markets might close because they might be a little bit too perfect unless you have one model that's much better than all the other models. That's my guess, but I'm not too up on this, so let me know if I'm missing something. But I'm curious, what happens as these models get much, much better at prediction than humans can? What is the effect in the short term and in the long term? To me, it seems like there's kind of a violent transition and then everything gets perfectly automated. But let me know if I'm missing something. So here are the historical average returns by all of the different models. So as you can see here, in the beginning, and keep in mind, like this was started, it looks like just about a month ago. So keep in mind, this is very, very recent. It's going to be interesting to see kind of where it heads. That's the point of these benchmarks, is to see where we're heading, right? Some people might look at this and say, oh yeah, but they're not better than humans. They're not quite there yet. Okay, but what happens if we track this for a year, for 5 years, for 10 years? That's kind of the point of this. We're trying to track how good they're getting at real world tasks that when they get superhuman at, we don't know what's going to happen, right? That's the point of these benchmarks. So notice right out of the gate, GPT-5, what 5x is the money? So the return, the ROI is 5.352, O3 mini at 5, right? So they're just like doing extremely well. But over time, it kind of converges to maybe like the expected value. So over time, as you see here, they're all approaching, 1. And after some time, again, it's only been a month, it looks like every single one of them falls slightly below 1. So O3 mini and the GPT-5 are still on top at 0.993 and 0.973. Now, this might be a little bit hard to see, but and I can't quite point to it without moving the cursor, but there's a market baseline score that is at 0.844. So O3 Mini, GPT-5, Gemini 2.5 Pro are all significantly higher than the market baseline. So a couple more data points for you, and then I'll get to the big point of all of this, the thing that kind of completes everything, because as good as this benchmark is, there's one thing that's not really talked about. We'll get back to that in just a second. So as you can see here, the O3 Mini is the best. So LLMs can reason about new information sources to gain an edge over the market. So one thing to consider is that betting strongly when you're confident versus betting the same amount across all of the bets will yield much different results. So if you can only bet $1 per bet, your overall accuracy is what counts. Whereas, with making larger bets, sort of that confidence, that edge you have over the market might mean bigger wins. So here they're saying to better understand O3 Mini's strong performance. So O3 Mini is, of course, one of the newer OpenAI's models. Interestingly, they have the O4 Mini High. I'd be curious to see how will that perform. That's not on leaderboards. And I just realized they haven't included Anthropic yet. Once they do, it's not going to appear on the leaderboard for past events, right? Because that's going to be contaminated data. Those things already happened. But as new ones come online, they'll start collecting data for those things moving forward. I gotta say, this is a brilliant benchmark. I love everything about this. So in this example of O3 Mini, it was betting on a Major League Soccer event between San Diego and Toronto. Go San Diego. And it earned $9 in return on a $1 bet, right? So huge sort of ROI, huge return on that one bet. Based on market data and news sources, O3 Mini predicted a 30% chance for Toronto to win, while the market implied only an 11% chance. Despite Toronto being the underdog, O3 Mini identified a positive expected value and bet on Toronto FC to win due to its largest edge. As it turned out, Toronto ultimately won, yielding a large realized gain for O3 Mini. Worth noting here that the reasoning sort of traces. They outline some of them for example, GPT-4o, GPT-4.1. So keep that in mind. We're able to see the reasoning that these models take to reach their conclusion. And then later we get sort of like what actually happens. So think about like how we do reinforcement learning. Like we can give it a thumbs up to teach it to think more like this if it gets the answer right. And if it gets the answer wrong, we can thumbs down and say, boo, don't think like that, and it slowly adjusts over time how it approaches certain problems. So having that data collected over a long period of time would be incredibly valuable to AI companies doing reinforcement learning. Here's my prediction. These guys, these benchmark makers, the people behind it, this company is going to get bought for a boatload of money. That's my prediction. I give it a high % chance because it's the idea of collecting that data over time for live events. So asking the models before the event happens and then tracking the outcome of that result. This is gold. If you're thinking about spinning up your own AI startup or something in the space, this is a great sort of example of where you're able to create something that has a lot of different possibilities to win. And just the idea of aggregating this data is incredibly valuable. I'd be curious to see if they open source the data. I would guess they do not, but we'll see. All right, so this is kind of the big graph, this chart that shows when it wins, when it loses, when it ties. So the markets have some idea about what's about to happen. These models, if they might have a different idea what's about to happen. So the gray here shows, when they agree, right? This is when it bets like the market bets and it all checks out. They agree. That's what happens. The losses is when it bets against the market and is wrong. And the wins is when it bets against the market and is right. I'm pretty sure that's correct. If I'm not, I'm sure many of you will let me know. So as you can see here, while it loses most of the time, like because during the ties and the wins, this is where it's not losing money. So as long as in the aggregate, this is more than the losses, then it's not going to just lose its money over time. And again, it's kind of hard to compare because it really depends on kind of like how you're betting the size of the bets. They're saying that models with higher rankings on average return leaderboard does not necessarily win against the market baseline more. These observations are due to the fact that the average return depends not only on win frequency, but also on the magnitude of the win, the edge or average return per bet unit of capital, $1, right? When a model is correct. Okay, so this is Jimmy Apples. He's saying, if you want an idea of what's to come, just keep an eye on the OpenAI strategic deployment team, thinking machines, mechanized, etc. So thinking machines is Mira Murati, right? Anthropic, I'm sure, is cooking hard in this area as well. So this is tech team from News Research saying the future looks like it may just be a billion reinforcement learning environments. So they're talking about this job post by OpenAI. So this is for a research engineer focused bets. That's OpenAI, San Francisco. If you're, doing anything in the area and you qualify for this, wow, would this be an interesting thing to be doing? I'm sure your signing bonus will be billions of dollars or whatever they're paying you people now. Congratulations. We're all completely happy for you, not jealous at all. But the point here is drive research and prototyping sprints into specific domains in collaboration with domain experts, right? So we're taking these machine learning PhDs, people that are doing AI research, etc., combining them with domain experts and seeing what they can come up with, right? So if you've been following AlphaFold out of Google DeepMind, so they spun it off as Isomorphic Labs. And that's kind of what they're doing, right? So there's like machine learning people and domain experts. In that domain, it's people in pharmaceuticals, biology, etc. And they just like throw them in a room and they're like, okay, work together and create this brand new thing that nobody's seen before. That's the combination of those two things. That's the intersection of those two things, right? Because before there wasn't an overlap between, biology and machine learning, and now there is. So people that are studying biology are going to have to learn more about machine learning. People that are going to machine learning, there might be different specializations such as, going towards biology, etc. And specifically, it sounds like creating these RL gyms, these reinforcement learning environments, where you teach the models to do the tasks that we want them to do better in specific areas, right? So they don't describe any specific areas here. So I don't know if they have specific ideas. Probably not. They don't want to mention it, right? But it's important to understand that this historical performance on the profit arena benchmarks, well, these are the out-of-the-box models, right? So it's the same model that you're chatting with, that I'm chatting with, right? They take them out and they try to have them make these predictions. And then once they make those predictions, Profit Arena, for example, they have the data about which models got it right, which models got it wrong. They have their reasoning traces, how the models thought about it, what information they looked at, right? So all the data about how they approached making that prediction. And then the job potentially, right? So maybe if some engineer like this, maybe would be paired with some sort of a market investing expert, some economy degree. I don't know. What do you call those people? Analysts, to try to kind of bridge the gap and also use that data to try to sort of give feedback to the models. Like when you think about it this way, you make correct bets, so think about it more this way, right? So thumbs up when it does well, thumbs down when it does poorly. And eventually, over time, I think it's very likely that someone somewhere will come up with a model. And it might be more than just a model. It could be AI agents that go out there and check, for example, the sentiment on Twitter/X about various companies or what's about to happen. Some of the agents that collect news, right? So they kind of aggregate all that data. GPT-5 already does that by default. So did O3 Pro, right? So it went and it gathered data, it read through the data, and it kind of answered you based on what it learned. So it's already has that functionality. But imagine that system being combined with reinforcement learning based on data like this, right? And over time becoming better and better at making these predictions. Now, what I'm about to say next is just my prediction, although I feel like this might be a lot of people's predictions if they see where things are going. Let me know if you think differently. But again, it seems like very soon, if we might already be entering this era where these AI models are going to be better at predicting these events and therefore making money off the markets than the professionals, or at least like the market. If you use a model to make decisions and bet on various outcomes, that kind of arbitrage is going to be very profitable for you. And keep in mind, this is different. We've had models in the past that were trained with reinforcement learning to make bets in the markets, but it was different. It wasn't this. It wasn't the general reasoning large language models specifically fine-tuned to bet on the markets, if that makes sense. That those were more like the old school, like AlphaGo, right? Just calculated things and it made moves, but it wasn't the general reasoning models like LLMs doing those things. So this is different, and we don't know how good it's going to get. But I think someone somewhere will figure this thing out and make a lot of money with it. If that person is you, please don't forget me. Remember me, your friend, Wes Roth. Make sure all of you are subscribed. This thing is coming in fast. Let me know what you think about this, because I don't have a background in whatever investing. I find it very interesting, but I just put money into Vanguard funds. I don't individually stock pick or do any of that derivative trading or whatever. I know people that do, and it seems very interesting, very fascinating, but it's just not my muse, so to speak. If you know anyone that would be an interesting person to interview that could maybe give us more of a glimpse into this, like if I can maybe talk about like the AI side of it, and maybe they can explain the investing side of this, what can you do with something like this? I'd love to be able to chat with somebody like that. So if you have some names, drop it in the comments. And thank you so much for watching. My name is Wes Roth, and I'll see you in the next one.